All right, good morning, everybody. Apologies for being a couple of minutes late. I forgot to hit the live button, so sorry about that. So I've just been talking to myself. If you guys can just quickly give me a yes in the chat box if you can hear me okay and you can see the screen, then that would be very helpful to know. And then we'll get started here right away. We only have about a little more than 10 minutes today to go through a whole bunch of really important stuff. So. Excellent. Cool. All right, let's get started. So as I was just saying to myself before, on my notepad, a whole lot of stuff. So we're going to go into quite a bit of detail as far as the broader market's concerned, as we had another risk-off day yesterday. We'll look at things like the VIX, we'll look at the S&P, certain levels. We'll look at uranium, semiconductor stocks, Carvana, Palantir, Qualcomm. And then I'm going to show you guys a strategy that's done extremely well for 30 years that I think might be a really good alternative to the S&P 500. So what you're looking at here, maybe to start off first, is you're looking at two lines on the screen. Actually, it's a bunch of lines, but let me get rid of these moving averages. You're looking at two stocks. One of them is Rheinmetall, which is a German company. It's a German defense company. It's absolutely skyrocketing this year and has done very well over many years. And then you have NVIDIA, which is now back to where it was in May of last year. So the reason I'm pointing that out is because we've been talking about NVIDIA being something that's likely going to not do a whole lot going forward. We talked about that last summer. We got a lot of hate mail for making that call because there's guys with colorful jackets and permabulls on CNBC that will tell you that the stock goes up every day, every minute, even when the market's closed. And of course, that's a bunch of horse shit. So just keep in mind the rate of change matters. The markets are forward-looking mechanisms. NVIDIA is a good company, but the stock is extremely crowded. So, it'll go up again at some point. I don't think we're there yet, but, that remains fluid and that can happen at some point pretty quickly again at some point. So just keep that in mind. So that's number one. Number two, I'm going to quickly share something with you that it's actually a question that I would like to post to everyone, and I'd love to if we can get some engagement, it would be awesome. I'm going to quickly share with you a chart. I'm going to quickly recreate it here, and I'm going to ask you if you think this chart is bullish or bearish. All right. So I'm going to quickly share with you a pattern, and I'm only going to share with you this part here, actually like this. All right. So I don't want to show you more because otherwise I think I'll reveal the ticker. But let's get some engagement here. Based on this pattern, just look in the upper right-hand corner. Based on this pattern, would you say this is bullish or bearish? It's kind of a nice basing pattern, right? Type in bullish or bearish based on what you are seeing here on the chart. So I'm going to quickly... it's like a basing pattern. We've got sort of this going on. We've got maybe a double bottom, right? We can get really fancy on this, okay? All right. So it's a bottoming formation. We're breaking all sorts of, resistance lines. So, in many ways, this is, just so you know, I see a lot of people typing in bearish. Maybe we need to send you guys a technical analysis 101 book. But yeah, it's bullish. Thank you, Steve. It's by technical analysis 101, this is a very bullish pattern. That's how things start. So maybe we have to start from the beginning. Now, let me tell you what this actually is. Okay. So what this really is the S&P 500 inverted. All right. So this is actually the inverted S&P 500. So I'm going to go and uninvert this, and you can see this is the S&P 500. All right. So how many people that said that this is bearish still think if you said it's bearish before, you must now say this is bullish. Okay? Because it's the same chart, just inverted. Right? So basically, I've now gone to the normal chart. So this is the S&P 500. This is the actual chart before it was inverted. If before you said it's a bearish pattern, again, please go look at the Technical Analysis 101 book. But also, if you said before it's bearish, then you must be bullish now for the S&P. Okay, so based on this, we actually think the S&P could go to like maybe 5,700. I am not thinking it's impossible that we see 5,000 at some point, not like tomorrow or anytime soon here immediately, but it's a possibility. It's absolutely not my base case. That's a big move, but I don't think it's out of possibility. let me give you a little bit of reasons why. First of all, we have a lot more volume picking up on the downside. So on down days in the past few weeks, we've seen a lot more volume than over the past sort of 6 months or so. So that's picking up. And then, of course, on our market rover, I'll quickly share this with you so you can see this. We've had a lot more near-term T signals, sell signals, and buy signals. So if I go into our scanner and I just look at buy signals versus sell signals, you can see all the zeros are brand new buy signals of individual stocks. So we have one page and like 1.5 page of new buy signals yesterday. However, sell signals, we have 1 page, 2 pages, 3 pages, 3 pages yesterday. So we have a 3-to-1 more sell signals than buy signals just yesterday alone. Obviously, we had a down day yesterday, so that makes sense. But it's also a lot more. It shows that a lot more stocks are starting to break down. That doesn't mean it's the end of the world. These stocks can bounce, of course, but that's something worth paying attention to. And then we want to go to the VIX real quick, which is something that we watch very closely. We talked about it yesterday, so I'll bring up the VIX chart again, and we talked about that sort of those 3 volatility regimes. And we are still in the sort of choppiness part, so above 17 and below 25. And so the S&P could still bounce, because in many ways, if we go back to the S&P 500 chart, which is, I know what most of you are probably allocated to, we're not really breaking anything. All we're doing is we're back to where we were at a very important level, which is about 5,800 on the SPX or 580 on the SPY, which is basically where we were after the Fed on December 20th. Remember, if you recalled, if you joined back then, we made a big deal to say that's an important low. That once again held in early January, and now we're back here again. So we could bounce here, but the market internals are telling us that we might be seeing 570 or 5,700, and then ultimately I think it's 5,500 is more reasonable to get to. And again, if we start to see things come off, which can happen if people start pulling more money out of U.S. markets, which we think is likely, then we could see 5,000. That's not tomorrow's business. That may not even happen in the next 6 months, but I'm just telling you that's something that is not impossible to think about. So I don't want anyone to go, well, surge at 5,000. No, that's not what I'm saying. I'm saying that's a possibility. It's maybe a 30% chance right now. I think 5,700 is like an 80% chance. So, just kind of put that into perspective. Now, I want to give you a couple of updates on things. So semiconductor stocks, which we talked about being more concerning, they are actually now in confirmed bearish momentum trades. So for those of you guys that are using the TST Trender, you will notice that we have new bearish momentum, both in semiconductor stocks. So that's the sell signal in semiconductor stocks, in the SPY, since a few days ago, in the NASDAQ 100 as well. So we have new bearish momentum in most of those things. So that's in addition to all the stuff I talked about. And then we have stocks like Qualcomm, which we talked about here quite clearly last week. And we reiterated even more than a week ago and said, listen, watch Qualcomm. And I'll get back to Abercrombie in a minute, but Qualcomm in a minute. Qualcomm, you can see we talked about that phase transition from bullish trend through neutral and now bearish, and sure enough, we've now reached targets 1 and 2, and we think this could continue. We talked about Abercrombie and Fitch actually more than a month ago at this point, and we talked about its phase transition. This was one of the best performing stocks over the past couple of years or so, and we talked about that phase transition, see how it went into a bullish trend. This is on the market rover. Then it went into a neutral trend and then into a bearish trend. It's down 30% since we talked about it being a bearish idea, and so that's working out very well. Then I want to talk a little bit about uranium, which is bearish trend and bearish momentum. So there's nothing bullish immediate term for uranium, but the fundamentals are extremely, extremely bullish on uranium. So this is something we want to watch very closely. I'm looking for buy signals. All we've done so far, even though it's been a big move, is we're back at the midpoint of a range that we've been in since 2021. I'm not a buyer here just yet, but I'm watching ticker symbol URA very closely, and so that's something we're watching every single day. And HYG, actually, we'll skip HYG for a minute. I want to talk about Carvana quickly. All those stocks that got chased higher, they're now correcting meaningfully. We even have, I think, Carvana. So this intraday. By the way, this is the trender intraday. Yesterday, we had a beautiful sell signal intraday in the Russell 2000. For all the indices gave us sell signals. It's a 5-minute chart, and sure enough, the Russell 2000 ended up dropping like 2% in the afternoon to the close. So if you have the trender, please make sure you take advantage of these. If you're day trading, it's an absolute must-have tool. Just get in touch with our team, and they will make you a great deal to have access to that indicator. And then lastly, really quickly, before I show you a specific strategy, I want to quickly show you Carvana, which we also obviously have bearish momentum. We had bearish momentum in Carvana now since, that's yesterday. Sorry, that's intraday. We've had bearish momentum in Carvana actually since post earnings. So we talked about this now being so the next leg could come soon in this stock. Is I was mixing it up with another stock. Apologies, but Carvana remains bearish trend. It hasn't moved higher since that signal because it got very overbought. Remember, we had a buy signal into earnings, and the stock rallied like 23%. But now we think we could see another leg lower in Carvana. Now, there's a strategy that we have access to that I think is very interesting. I'm just going to quickly show you guys the statistics here a little bit so you can kind of see. And then if you would like more information on it, you can just email our team, or you can just email support at the steady trade, or actually you can email just maybe support. So let me quickly share with you what the statistics are. I don't want to give you the whole fact sheet here because I want to be a bit mindful. But what you're looking at here, hopefully you guys can see this in the upper left-hand corner. I'm going to make it a bit larger here. Sorry, 1 second. Let me make it a bit larger so you can see all this. Here we go. That's better. All right, now let me move it over here. All right. So what you're looking at here is a strategy. This is a 30-year track record. 30, right? And you can see that since inception, this strategy has returned 7.5% per year. Now the S&P has done better, right? 9%, but the S&P is way more volatile. Like you can't even compare this. And so the S&P 500 is like, crazy. Like the worst drawdown that this strategy had was 18%. The S&P has corrected 50% in that period of time. A 60-40 portfolio has had 32% drawdown. So if anyone is sitting here today and you're getting a little nervous, maybe you're thinking what we're thinking is that the Max 7 stocks that have driven basically the S&P 50% higher in 2 years, maybe the S&P might go sideways for the next 5 to 10 years or make just 5%, which is kind of our base case. This is a really interesting strategy, essentially a hedged version of the S&P 500. If you'd like more information on it, we're happy to send you this fact sheet, but you will have to email support@thesteadytrader.com. Okay, so if you like the idea of being in a hedged version of the S&P 500, in fact, I need to quickly move my camera so you can see this. This is the full details. Just email support@thesteadytrader.com, and we will be able to send you in the right direction to get the fact sheet. So what it is it's basically a hedged version of the S&P. So instead of swimming naked, which was what most people are still doing right now, this can really help. And when the S&P has down years, this thing can even be up. Like in really bad years of the S&P, this thing is actually up. So it's really an interesting strategy. I think it helps investors sleep better. Again, not a recommendation as always, it's educational, but if you would like more, again, email support@thesteadytrader.com. If you have access to Joel, just get in touch with him and he can put you in the right direction of where to find out more and get the fact sheet on this type of strategy. So that's it for here today, folks. All right, we're going to get started in about 2 minutes over with the Inner Circle and Market Rover member session, and then we'll switch on over to the chat room. Looks like it's going to be another day full of opportunity. And again, if you're interested in this kind of a strategy, just a fact sheet, that's all it is. just email support@thesteadytrader.com. Thanks for being here. Have a great day, and we'll also see you back here tomorrow morning at 9 o'clock New York time. See you soon.